Hey, I just want to make a quick video on a trading rule that I have. Actually, it's a newer one. It was always kind of in place, but now it's like, I guess, double in place, so it doesn't occur. Um, but it's really straightforward. Is if it's an inside day, I do not sell my position. Pretty simple as that. Meaning, don't sell on an inside day. I want to go first into the horrible experience as to why this became a rule. Then I want to go through a few examples of where it applies. Okay, so I created this rule earlier in April of this year on SNDK. I purchased this day right here. I had a really awesome buy. I want to zoom in. So a lot of what I trade is based on my stop, right? So, and a lot of that is based on some pullbacks and support, some undercuts, right? Whatever. So this was the low of the previous day right here, 899.20 was the low, and on this Wednesday, 422, we undercut that low briefly, and then reclaimed, and I had purchased a decent bit of SanDisk at 903 on this, and I put my stop at the low of the day. Okay, as we undercut the previous day low, tapped into the 90 MA and reclaimed. So I think that was by 896 at the time. 895, I think my stop was. Actually, my entry was 905, and my stop was 895. I was risking $10 per share, just about 1%. Stop. So my stop on the position would have been 1%. So if I would have full ported this, I would have had a 1% loss. If I would have gotten 50% of my account, I would have lost 0.5% of my account. Just to kind of put into perspective some of the sizing. Okay, I didn't go that big. I went 20% of my account with 1% stop. That's 0.2% risk. That's tiny. Anyways, here is it had an awesome close. I was stoked about this trade. So I was already in MU at this time. I had bought MU here, and then I added at the 90 MA right there to give me a 417 average. And this was a significant part, portion of my account, about a third of my account at the time, was in Micron. And I had added to SanDisk like we just went through. Strong close, man. This closed up at 979, so I was up 75 bucks per share on $10 of stop. 7-1 risk reward on day one. And then the next day, so I already was kind of a little bit, I don't know, flustered, not flustered, if you will. Market was long in the tooth, right? We had just essentially gone straight vertical, didn't have a red day for 14 days in a row. And then we had a couple red days, like, okay, it looks like we're going to go sideways for a little bit. It looks like we're going to get some time to see where some support levels are on some of these stocks. And we just kept blasting up on there. And the next day, we, broke through the previous day high, and we pulled back in, and, it's looking a little bit whatever. I don't know. This is nonsense. Anyways, let's go over to what SanDisk did that day. You see this black candle, that's an inside day. Inside day, if you're not familiar, is just a stock that does not break previous day high and does not break previous day low, so it just trades within the previous day's price action. And for some godforsaken reason, I made the decision to sell this at about 930 down here, literally at the lows. And after watching this pull back from 980 to 930, I sold it at 930, and it was just an inside day. Next day, goes up to 1,000. Next day, 1,100. Pulls back in, retests the top of this base. Trends, you guys know what happened next. Pulls into the 20 MA, holds. Trends higher. Pulls into the 20 MA, holds. Trends higher up to 2,200. So I would have been up over 100% on this position. Would have been good for about a 20% gain in my account. And so anyways, after this, I made a hard roll not to sell an inside day. Meaning that it either has to break into my stop or it has to fail above and pull back in. If that occurs, then I can sell. almost sold CrowdStrike today, while some things were pulling back. I own this at 678. From down here in this range here, I can just mark out that price. 678. Dun, 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 dun. Good enough, right there. Okay, so on this side, 678. My stop was down here at 666, 665. Yeah, 666. And so risking about 2.5% on the position. 2.5% stop is fine. Anyways, it was pulling back in. This has been kind of a headache. 4 days, super tight. Can't get over 700. Even though it's doing nothing wrong. Same thing with Snowflake. I traded Snowflake a couple times. Right, just going sideways. Took a small loss on it. D-Dog, same thing, just going sideways. Again, doing nothing wrong, but just not moving. Anyways, and I was about to sell it, and I was like, wait, nope, Patrick, you cannot sell an inside day. So either just keep your stop, right? Because one thing, the reason why I made this rule is not because there's anything special about an inside day or, whatever, but it's just a fundamental belief of if you're getting into the right stocks, if you're participating at good locations, buying pullbacks, buying higher lows, one of the worst things you can do in a bull market is over-involve yourself. And I think a lot of people do that too much. They try to sell top, they try to avoid pullbacks, and they try to rotate to the fast-moving, shiny object, when often the best thing you can do is just sit tight. Let your stop be your stop. Let your stop be your guide. Let the decision that you got into a good stock at a good spot, and let it knock you out at the invalidation spot, at your stop loss. Okay? So this has since saved, we'll see, I guess, if Crowd saves me, money. And a couple other examples of an inside day. Just don't sell them, right? It also, the facts of rules in general are less important, right? Like someone might come in, well, no, you should trail the 9 EMA instead of trailing the 20 EMA on your winning positions. Okay, I understand that there might be some nuances in in data saying that this might be more effective than that. You should trail the 50 SMA instead. You should sell into strength here. What's more important is that you have that framework to avoid yourself from over-involving yourself, because we're prone to make mistakes. We're prone to dabble and involve in heightened periods of emotion and volatility when we're much less likely to make calculated decisions. So you should have framework in place to prevent that. This is one of those. And again, doesn't exactly matter what your specific rule is about, certain specific things, whether it's selling, buying, stock selection, what have you. It's just that you have those, and then from that we can build upon, improve, and tweak and improve from there. So anyways, that's my inside day no sell rule. We'll see if it saves someone some money or makes some people some extra.